After a significant sell-off during June, we did see the price of gold recover partially during July. So what can we expect for August? Are we going to see a run back up to those June highs at the least, or actually is it going to move lower once more? I thought it'd be interesting to take a look at gold as we start the month. It's nearly a year since we had those all-time highs for gold, beginning of August in 2020, trading up to around 2,075. And we can see, since then into March of this year, a lack of upward momentum. Rallies would just be met with selling. But I do wonder if we've seen an important base built during March. And even though it got knocked back quite heavily in June, are we going to see more of a recovery as the year goes on for gold? So as usual in this video, I'll talk about some of the news, what to watch out for. Then we'll come back onto this, take a look at things in more detail and see if there's an opportunity. We do have some trades running on gold at the moment. So they were opened on the 16th of July, down at 18.10 an ounce. The market's slightly ahead at the moment, 18.13. So slightly in profit on those trades, but no reason just yet to move the stop loss. So I'll talk a bit more about gold now, then we'll come back and see if there's another opportunity. Hello, I'm David Jones from Capital.com, and I thought as we are at the beginning of a new month, let's do an update and an outlook for the price of gold. So as usual, in this video, I'll talk about some of the recent news, what's been driving it. We'll look at the levels to watch, support and resistance for the month ahead and a bit longer. Then we'll jump back onto the platform, take a look at the charts in a bit more detail and see where the opportunity might be. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of content during the week on the various markets we look at. And of course, every Friday at 2:30 UK time in the afternoon, I do a live stream direct from our YouTube channel where we take a look at a whole host of different markets in real time. If you're subscribed with the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live. Right, let's get into it and take a look at gold in a bit more detail. So it's been almost a year now since we saw those all-time highs for gold, August of 2020. And then since then, we've seen, I think, a distinct lack of momentum for the price of gold. Although saying that, it did, during June, hit 4-month highs. But after that, June ended up being a bit of a bad month. The price of gold was down 8% on the month. We have seen, during July, during the last month, some of those losses clawed back, but not all of them. And I think there's a few reasons for this. I think one of the reasons, if you're looking for places to put your money as an investor, we still have, if we look to US stock markets like the S&P and the NASDAQ, we've still got stock markets continuing to hit fresh all-time highs. Even when they get knocked back, they bounce back and we see fresh highs again. So I think people aren't really thinking about being that defensive at the moment and are still happy to embrace risk with stocks. Of course, it's not going to stay this way forever. In the second half of this year, if we did see perhaps investors become more concerned about stock valuations at current levels, if we see worries about inflation ramp up a bit more, this could play into the more bullish argument for the price of gold. So whilst we're not seeing it at the moment, there could still be some factors that help lift gold as the year goes on. From a technical point of view, we'll have a look on the charts in a second, but I do still think that during March, we did see an important base form for gold. It got hit hard in June, but for me, overall, the bias still feels to be more up than down for the price from here. So whilst it may still be some time before we see that all-time high from a year ago anywhere near threatened, I still think there could well be opportunities to buy the dips. But before we look at the charts, let's talk about the levels to watch. I think as volatility was a bit quiet during July, we got fairly tight support resistance levels. For me, the most immediate hurdle, it's one of those July highs at 18.34. On the downside, we got support just below 17.90. So as usual, to put some color on these numbers, take a look at some of the other levels. Let's take a look at the chart. So as usual, here's the big picture trend for gold going right back to the August 2018 low. So 3 years ago now. This trend did a great job on the way up. We saw the market come close to it in March of last year, then of course accelerated away up to those all-time highs in August. At the moment, that trend line is sitting around $1,600 an ounce, so not too relevant now with the price trading $200 above that. If we see it get hit with some weakness in the months ahead, it could be a more relevant level to watch. But for now, what I want to do is perhaps zoom in on the last 12 months or so. So here's the last 12 months. I put a 50-day moving average on this. I think it's done a reasonable job on the way up and down of providing signals for gold. We had a buy signal back here, the 15th of April, a sell signal as it went through 1840. And just in the last couple of days, we've seen the price briefly move above for a day, above that moving average, and give us a buy signal. It'll be interesting to see if it can hang on to that, because it looks like last Friday it was about to cross back below and give a signal the other way. So perhaps still somewhat choppy at the moment. So I said I thought an important base would be formed in March of this year. We had those lows coming in around 1675, and again at the end of March down at 1677. The price did then go on to break out of this correction it had been in since those August highs, all-time highs from the summer of 2020. And you can see the hit in June knocked it back quite severely. But for me, the bias is still up, and I think if I was looking to do a trade now, let's take a look at the RSI down here. I mean, the RSI has spiked up to overbought a couple of times in July, 15th of July here, and again right at the end of July here. So perhaps we will see the price come under a bit of pressure from now. But what I would be watching, these old lows, if we see it push back near these lows from the end of June, down around 1750, I think that's going to be interesting to see if we do see the price bounce off here. It does tie in with the lows just at the end of April, again around 1755. So I think 1755, 1750, 1760 is an important area of support for gold. I think if we see it slip below there, the risk is we are going to pull back and take a look at the trading zone from March. But to try and set a trade up, let's take a look perhaps at the short term. Let's take a look at the intraday charts. So this now is a 4-hour chart. So every candlestick represents 4 hours worth of trading. There's those lows from late March in there. And you can see, I think, perhaps how important this 1760 area has been since the middle of April. It had a quick look below it at the end of June, but the price recovered. So I think what I'd like to do when it comes to a trade, it had a bit of a weak finish at the end of last week. I'm going to leave an order to buy. So I'm going to put my order to buy. Perhaps down at 1800 or the other side of 1800. Let's go 1790 for an order to buy and give the market a bit of room, because if I do think it's going to recover from here, I don't want too tight a stop. So if I'm a buyer at 1790, I'm going to put my stop in at 1740. So the other side of what I think are these important lows. So we could see a bit of choppy trading in gold, but if it gets knocked back below 1800, perhaps the trade gets filled and put a stop at 1740. Let's set that up. So I'm ready to go. So the price at the moment, the market's closed. I'm recording this ahead of the market open, but I want to be a buyer of 7 ounces. If the price drops back to 1790, you can see that on the chart here. So basically back to the lows that we saw in the last week of July. If that order gets filled, put a stop loss in at 1740. Again, you can see that on the chart, the other side of these lows. So it would mean it was dropping back to where it was in the first couple of weeks of April. And I probably want to be out of the trade then, because it looks like there's a serious lack of momentum. And that's it. Let's place the order. So the order's in, buying 7 of gold at 1790 with that stop attached. We'll see if that gets filled on some weakness. So for me, we have seen, I suppose, some fairly scrappy trading over the last couple of months. I still think these lows from March are important, and we could well see the price get lifted and have a run up above 1900. Let's see how August unfolds from here, whether that order gets filled and whether we can see gold claw back some of these losses from that big sell-off in June. That's it for this update in gold. We'll see if we can continue to win back some of those June losses as August unfolds. We'll come back to it and take a look as the month goes on. But for now, From me, David Jones, and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.